How you doing, guys? Welcome to another episode of Memoirs of a Trader. Woo! So I'm back on the shore now, and today's video is all about how in the space of just under 3 weeks I went from 0 to 35 grand on 2 trades, 6 positions, 1 commodity, and a lot of profit. I'm going to open up the charts and show you what I saw from a chart perspective to give you more of a realistic idea of why I took these trades, when to get in and why I got out. Okay guys, now I'm going to show you everything from a chart perspective and hopefully you can still hear me. Okay, so let's get straight into it. What I've done for the purpose of this video is that I've rewound the chart so that gives you guys a bit of an insight into what I saw and why I executed the trades when I did. So it was on the 4th of September. You can see the time down here is when I saw this. And then in doing so, I remember seeing this particular candlestick, yeah, which is a long-legged doji, which is there on the daily time frame, and I knew that potentially price may reverse just purely based on that. But what I can see here is after a very aggressive move to the upside, what gold was doing for a whole month, it was just non-stop rallying for a month, that it needed time to breathe, and this was the breather that we saw, yeah. In the middle of August, we saw a big breather coming down here. And then price kind of just was within this area. Very, very quickly, it's very clear to see that you can see some sort of wedge pattern. This is a wedge pattern. I'm trying to get my 3 touches in. Touch 1, touch 2, and touch 3. Valid trend line. Touch 1, touch 2. I'm anticipating price to go up for a 3rd touch, which would validate this trend line as well. So this is a wedge pattern. Within this wedge pattern, yeah, you have a Elliott wave corrective structure. So the downward move here, yeah, will be classed as 0. You up for an A, B, C, D, up for an E to finish off the structure, and then you break out in the same direction as where price came into the pattern. So price came in downwards, so it will end downwards. The bigger degree pattern is an A, your sideways would be a B, and then your breakout downwards would be a C, which should theoretically exceed the previous low point. Now, so that's a wedge. I'm not going to get into a lot of the specifics and a lot of the actual terminology and what certain things mean. That's obviously for further education. That's for you guys to do your own research, or for you guys to join an educational platform or join PFX. Do a lot to learn. So I'm not going to waste time and get into all of that because there's a lot of information. But I'm just going to briefly show you exactly what I saw. Upon seeing this wedge, I'm now going to draw 0. This one becomes A, B, C, D, and then I'm expecting an E to finish there before breaking out downwards. So I'm looking for something along the lines of reaching there, then reaching below. Now, where are we going to go below? So did you see the highest point in this whole area is up here? So I'm going to get array, and I'm going to put array at the highest point, which is there. The lowest point, again, within this area is down here. So I'm going to place array at the lowest point, which is there. You know, guys, it's really hard to chart, to do anything when you're sitting on a beach when the sun is absolutely pelting down in your face. But I'm trying my best, which goes to show anybody who posts all their charts, their screenshots, of their chart on the beach, yeah, with the perfect chart you can see on the beach, a lion. I mean, everything's always glared. It's very, very difficult to do anything on the beach, especially when the sun is coming down. So don't be fooled. Okay, so we've identified the rays. The significance of the rays is price is in between these. Yeah, it's in between the top ray and the bottom ray. So that's the area where price is going to go. We've also identified, at the end of the wedge, the breakout is going to be down, where I would say at least we're going to break down, yeah, to the same point as the bottom ray. For it to complete, yeah, it will have to exceed this, which I believe it will. But I believe we're going to go there anyway. The total reward pip ratio from here is about 1,000 pips. Take off the last digit, yeah, and there's about 1,000 pips. Now, what I'm going to do now is I can see two areas, yeah, two areas where price likes to go a lot, yeah. So 1925, if I were to add this, oops, what did I do? Press the wrong button. Let me go back to it. There we go. Let me just grab this. Let me change this to a key level. I'm gonna change the coordinates to exactly 1925. And this shows you, look at 1925 as key level. Look how many times price touches this area, numerous times, right? Key level. I can also see price touch 1975. At the same time, I'm going to put another one here, 75, key level. Change that to here. There you go, key level, key level. So now we've got price within this smaller area. So we've got the two big arrays. Now we've got a smaller area where price is basically between. We get the breakouts, but then we're back inside. Small breakout, back inside. Breakout, back inside. So I believe as the wedge closes, because as the wedge closes, you're going to get a breakout either end. I've identified it's going to go down. So I believe price is going to get to here at least. Right? So that's the basis, and that's the hard work done. Yeah, that's all your analysis. That's everything that you need. You now need to understand numerous confirmations that's going to help your bias. It's going to help your confluence and where you believe price is going to go. So I'm now just going to press play, and we're going to see how price reacted. Now, I'm just going to pause here. Yeah. Initially, you saw price go in our favor. Yeah, go in my favor. So my original position was a buy limit, which was on the 7th of September. That was placed here, triggered overnight, and by the 8th of September, I was in the position. Then price started to go in my favor, but then quickly went against me. Yeah, when it went against me, yeah, it wasn't something where I should be scared and I should get out of the trade because E still hadn't been completed. Elliott wave principles told me that E has to complete before you get a breakout. So I took this opportunity to add another position. Now we're in business. So when price came down here under the trend line, yeah, this doesn't mean that your trend line is invalidated. No, this is what you call a stop hunt, a fake out, where price goes to take out people's stop losses, it takes out all the weak hands, and then continues to go in your favor. So I now have a total of 3 positions, and I took the opportunity to add my last position all the way at the bottom here. And then now we're moving. We're moving into profit, considerable profit, because now I'm in 3 positions in the same trade. And for the purpose of this, I'm just going to extend all the trend lines a little bit more, a bit more. So a lot of people would have seen this. Price getting close to the trend line and thinking, yep, that's it. That's E complete. Yeah, and we're now going to break out down. A lot of people would have seen that. I didn't. I held my position. So now my profit, which was, I believe, top of my memory, was about 7,000, was now going down, going down, going down. And I was back to about 3,000. And was I gutted? Was I kicking myself? Yes and no. Yes, that, damn, I could have probably banged that money and got back in again if it revisited the bottom trend line, because the top trend line still hadn't been met. Yeah. But at the same time, I thought, you know what? I'm going to hold. For the purpose of everything that I'm doing, I'm just going to hold just to see it play out. And then, so yeah, I held and held some more. And a lot of people were calling this was going to be the drop from there. I didn't, because the trend line at the top still had not been met. And there we go. That was it. That was it. 19
70 was my take profit area. So now, for me, the trade is done. So that's complete. So now all I'm going to do is adjust all my trend lines ever so slightly. And I keep that like that. There you go. So now that I'm out of that position, reevaluate, double check, make sure that everything's still going according to plan. This is now E, complete. Now I'm expecting the break down. So now let's move this to here. Let's make that a little shorter. So the initial move up, done. We can delete that. Now I'm biding my time. So I waited for my reversal signs, everything that I needed to tell me that price was going to go down, entered my first position. Same thing basically happened where price went against me a little, for a while. I added positions. So again, I had 3 sell positions on the same trade. And we're moving. There you go. You see, when price went up here again, this is where I started adding the positions. So it started to go in my favor. Went back up. That's when I added my positions. And now we're on the move. Actually, no. From top of my memory, as price started to go down here, that isn't when I got in. I got in all of my positions here. Yeah, so I got my initial one was here. And then when it started to go against me, I added another one. And then the third one was up here. That's when it was. Because I remember that was the reversal signs that I was waiting for, that I saw. There you go. That's the daily telling me that the failure to go above 1975 was there. So I knew that price was going to ultimately go down from there. And so my 3 positions were in. And I guess the rest is history, because at what point would any of you close that trade? Look, as it started to go back up, fearful, but no, I held, because my target was down here. My target was here. And look at that. Then everyone would have seen this hammer, huge hammer, significant wick, thinking price was going to go up. But the group wicks at the top told me that we were going to continue going all the way back down. And then lo and behold, target hit. And that's it. And remember I said earlier on that if price were to exceed the ray, then you're going into a new range area of price. That's exactly what it did. So that's your ABC of Elliott wave complete. And that's that, guys. And then so my TP for this, I believe, was 1862. 1862 is when my take profit for my sales were. And the total going up, something about 11,000, and again back over 24. So you're looking at a total of 35,000 pounds in 2 trades, one going up, one going down. Total of 6 positions, 1 commodity, that commodity being gold. And that's that. So that's what I saw, and that's the reasons why I believe price was going to go where it got to. And I hope that's a great little insight into what I saw.
So what you saw there was just a quick overview of a gold chart that I put up with the reasoning as to why I took those trades and why I got out. Now, there's obviously a lot more work that goes on behind the scenes. There's a lot of emotions, there's a lot of discipline that needs to take place as well. But I hope that gives you a little bit of an insight into the level of charting that I do and that we do at PFX. And on that note, and lastly, the last thing I want to say is for those of you who are trying to get involved in trading, those of you who are actively involved in trading, those people who actually don't care about trading, ask yourself, how long does it take you to earn 35 grand in your day-to-day job after your tax, after your NI or pensions, whatever you guys are paying? How long does it take you to earn 35 grand? Well, I've just shown you how to do it in 3 weeks. If that's not an eye-opener, I don't know what is. Take care, guys. See you soon.
Best friend for 20 I heard the heavens crying above me. They gained an angel, I lost a friend. I felt like dying again and again. I went through hell, stared at death, but I keep fighting.